Alright, welcome back. So in this channel we talk about investing, and the main idea here is taking positions based on how we think the market is going to move. And markets can move in one of three ways, right? They can go up, they can come down, or they might stay flat. And what we do, what positions we put in the market, depends on which one of these three outcomes we think is going to happen. So to use the market terminology, these movements are known as trends: uptrend, downtrend, no trend. So in this video, we're going to talk about three ways we can identify the current trend. The goal here is to make it as simple as possible. Okay, we don't want to be staring at the charts forever, trying to figure out what the direction of the market is and what we're going to do about that. So by the end of this video, every time you open your charts, you should be able to quickly identify what the trend is, what the market direction is, and that will take you one step closer to making sound investment decisions. For this video, I will be using daily charts. Before we begin, we want to make sure that we set up our charts properly to make sure that you have enough data on your screen that is in front of you. This is an example of not having enough data. I could say that the prices are moving in an uptrend, but when I zoom out and look at the bigger picture, that actually might tell me something different. So it's very important that we have enough information in order to do our analysis. So generally on a daily chart, we should try to have at least 1 year of information. Now it's October, so when we look at the time axis of our chart, we want to make sure that we at least have information starting from October of last year. The first method of how to identify a trend is also the easiest method. You open the chart and you look at it. From the left side to the right side, how have the prices moved? Is it higher? Is it lower? Is it the same? Very clearly in this chart, the prices have moved up. So this one tells us uptrend, prices have moved up. So what about this chart? From the left side to the right side, clearly prices have moved down. So downtrend. So what about this example? From the left side to the right side, how have the prices moved? It mostly has moved sideways. There is no clear discernible trend. So this is a no trend or a sideways movement. And what about this chart? Left side to right side, how have the prices moved? The price actually moved up, and then subsequently it moved down. So within this 1 year period, there was actually a change in the direction from an uptrend into a downtrend. But overall, in the last 1 year, it kind of is sideways. So that's pretty much the first method. You open the chart, you look at the price movements over a period of time. In this case, it was 1 year. The start of the year, where was the price? End of the year, where was the price? How did it generally move in between? The second method is to observe for the turning points in the prices. What do I mean by turning points? Basically the highs and the lows, where the prices have changed direction from upward movements to downward movements, or downward movements to upward movements. So the textbook definition of an uptrend is when the price chart is making higher highs and higher lows. And the textbook definition for a downtrend is when prices are making lower highs and lower lows. So when there's no trend, normally we will see the price bouncing up and down in a range in between a support and a resistance. We're looking out for these signs. We're looking out to see if there are higher highs, higher lows, or lower highs, lower lows. Or we're looking out to see if the prices are stuck, bouncing around in a certain range. However, I must caution though, that using this method sometimes can lead to very, very subjective outcomes. For example, in this chart, what we see actually is an uptrend, where actually we do see a series of consecutive higher lows, but we didn't always see a series of continued higher highs. Not every high turning point is higher than the one that came before it. So if we were actively trading this stock, at this point in time, it might actually look like the trend direction has changed. But today in hindsight, we see that this was not actually the case. I still think that this chart is in an uptrend, even though it may not meet the textbook definition of what an uptrend is. The green line that I have drawn, which connects the low points, is known as a trend line. And trend lines are helpful when we are trying to identify the direction of the market. The process works like this. When I open the chart, I use method 1 and I see from left to right, the prices are moving up. If I see the chart is moving up and I think or expect that the prices are going to continue moving up, then I'm going to be looking for buying opportunities. And because the gist of investing is buying at the lows, right? So I'm going to draw a trend line that connects the lows because it will help me to see where are the potential buying opportunities to benefit from this upward movement in prices. So it's kind of like a diagonal version of a support. It shows me where the potential buying opportunities could be. So this chart, method 1, left to right, what is the direction of the price? Clearly, it is moving down. So prices are moving down. If I expect them to continue moving down, I'll be looking for opportunities to sell. And therefore, I will draw my trend line connecting the highs. Once again, we see that this is like a diagonal version of resistance. It kind of prevents the prices from going higher. And therefore, what it shows me is potential areas where there may be selling opportunities. So in this example, from left to right, we see the prices kind of are pretty much the same. We can see that the prices moved up and then they came down. We can connect the lows. We see that there was an uptrend that respected this particular trend line. And right now there is a change in the trend and the prices are moving down. The trend lines help us to identify potential buying opportunities, but there's no guarantee. The trend lines can be broken, and when they are broken, a new trend can be started. So in this case, we see that in this chart, potentially the trend has changed from an uptrend to a downtrend. So this is method 2. We observe the behavior of the turning points in the price, the highs and the lows, and we can use trend lines to help us to see how the prices have moved and where are the potential trading opportunities. Alright, we've now come to the third method of how we can identify a trend, and in this method we're going to be using moving averages. It's the same psychology as, let's say we take an exam and we kind of want to know like how well did we do relative to everybody else who took the exam. So we take the average scores of the entire cohort, everybody who took the exam. If our scores are higher than the average, then we did better than the average person. So, good job. So this yellow line is a 50 period moving average. So what it shows us is the average price for the previous 50 candles. So it's a moving average because every day is a new candle. So the data set of, the last 50 candles is going to shift as new candles are created. Alright? So we can see that the moving average helps to smooth out the prices, and we can kind of see a bit clearer what the direction of the market is. So the industry in general tends to observe a few moving averages. The most common ones are like the 50, which is what's on the chart right now, the 100 period moving average, which we can see is actually even smoother and less choppier than the 50, and the 200 period moving average, which is the blue line, that's even more smoother than the red and the yellow line. Okay, so how can we use this to help us to identify the trend? So this is another textbook concept applied. When the 50 moving average is above the 100 moving average, and the 100 moving average is above the 200 moving average, and all the three lines are pointing in the same direction, then the market can be said to be in an uptrend. If the 50 moving average is below the 100 moving average, and the 100 moving average is below the 200 moving average, and all three lines are pointing downward and moving in the same direction, then the market can be said to be in a downtrend. So actually for uptrend and for downtrend, we can see it's actually very clear. The moving averages are aligned, the 50, the 100, the 200, but they must be in the correct sequence. And also, the lines must all move in the same direction. But when we see the moving averages doing something like this, where it's all jumbled up, you have no idea where it's going, then this tells us that there is no trend. So moving averages can be really helpful tools in helping us to identify trends, because all we have to do, look out for where the tree lines are and what they are doing. Alright, which of these 3 methods did you find to be the most helpful? Do let me know in the comments below. Personally, out of the 3, method 2 is the one that I prefer to use the most. But drawing trend lines, it can be as much an art as it is a science. So it will take some practice and some patience in order to identify them quickly. So that's it for this video. I hope that you learned something today. I hope that it will speed up your process of identifying the market direction. I'm sure there are many other ways to identify a trend, but personally, I prefer to keep things as simple as possible. The reality is, the trends only tell us what the market prices have done in the past, but there's no guarantee that these trends are going to continue in the future. So a lot of these things, right, these patterns, trend lines, support and resistance, I think a big part of how they are used is psychological. And we will cover more of these topics as we go along. Topics like market psychology, mean reversion, the contrarian mindset, and how we're going to use options after we have taken into consideration all of these concepts together. Actually, it's a lot more exciting than it sounds, okay? So I will do my best to make it informative, interesting, and exhilarating. You don't want to miss out on that, so make sure you are subscribed. Alright, and I will see you in the next video.